morning, ladies and gentlemen. Welcome to this Zopper BFSI NXT10 InsurTech 2023 Summit. And welcome to the first panel discussion of the day. We have icons of the industry sitting here. And together, almost more than 100 years of experience sitting in the panel. So it's going to be a great discussion. The topic for the first panel is Insuring Bharat Phygitally from Vision to Action. So let me begin the discussion by asking the first question to Neelesh. Neelesh, you've been in this industry for more than 2 decades. And when you joined 2 decades ago, the insurance penetration, non-life, was about 0.5, and today it is about 1%. And the industry has grown by more than 16% CAGR. So how do you see this penetration over the years, and how do you see it for the next 10 years? Is it going to be, much better, or you see the same steady growth and same kind of penetration growth which is going to happen? And would like your honest line answer.
Hello. Good morning, everyone. First of all, congratulations to Sujendu and the team for hosting a great event. Zopper is doing amazing. Thanks, Parvez. I think we can. It's like the glass half full, half empty. We can feel good that we have moved from about 0.45 to about 1% today. But when I look at the destination, which we should be probably around 2.5%, if not more. So then obviously, we have a very significant distance and journey to cover. And if I may, from a non-life perspective, make a few comments here. So one, I would say a lot of the non-life insurance which has been sold has been the mandatory kind. And whether it's in motor insurance, where it's a mandatory rule, that insurance, especially third party, needs to be bought, and hence, there's a fear of the policeman catching us, or it is for the Schengen, when we travel to Schengen, so everybody, it's mandatory for the visa requirement insurance, people show that. But whenever anybody travels to Southeast Asia or Middle East, which is typically for 1 week, people do not buy insurance. Or it is, in terms of the lenders, when the lenders say, my asset needs to be secured for this period of time. So I think a lot of the mandatory insurance have been sold, which essentially, I think the point, Mr. Kumar made very eloquently, that while we have moved a lot of distance, still a lot of journey, a lot of distance, needs to be covered. And which we will probably, come later into the conversation, but which is where in a country like India, where there are 600,000 villages, it is basically the fragmentation of the population, which kind of becomes a big challenge. Second, I think, somebody said in the morning, India is now reaching the point of inflection of $2,000 per capita GDP. So right now is a time, where the middle class of India is getting larger every day, and they are having assets. And when you are having assets, then you start worrying about insuring them. So I think, this is probably, I couldn't have thought of a better theme or timing of this, conference, so which is where I would be, the regulation, the government initiatives, the industry and InsurTech ecosystem, I think we've got the recipe for moving from a 1% to a 2% penetration.
Interesting. 2.5% is a good number, because it's coming from you with a lot of line experience. Anand, let me come to you, and you've got a lot of experience both on the life and non-life side, and you've seen the challenges of the physical insurance model. The reach has always been a challenge. So even though insurance companies want to reach the last mile, and he mentioned about those 600 villages, the agency and the bank assurance distribution just doesn't manage to reach there. And digital seems to be a solution, but digital has its own challenges of trust and being an involved product, being a push product, digital has its challenges. So is Phygital the way forward? What's your take on it?
First of all, thanks for inviting me. Zopper and Amol, thanks for having me in the midst of this wonderful esteemed panelist. Phygital is the only thing that will go, according to me. And I'll give you the reasons why I would say that. Post 2002, the regulations completely changed. We had only one, what we call it as the tied agency channel for distribution. Then we had corporate agents, we had brokers, we had IMFs, banks were being authorized to sell and all that. But have we really reached the masses which require insurance? All of us talk about penetration. Penetration obviously is only the typical formula of new business with GDP and all that stuff. To give you a simple example, during the first Chennai floods, the economic losses were roughly about 24,000 crores. And correct me, because that time I was in life, Neelesh was in non-life. I think the claims that were received were less than 2,000 crores. Right? But has the people understood the importance of insurance even after that? No. Recently, we had the almost similar spell in Bangalore and Chennai. Look at the difference between the economic losses and the claims that have come. J&K floods, same thing. Himachal, same thing. Look at the way how life insurance has happened. Life insurance, obviously, from 2002, all the new companies started coming up with ULIPs. Amol also said that he bought a ULIP. Now, does the guy in the village who does not even know, or at that point of time did not even know the meaning of NAV, or what does it stand for, how is it calculated, and how is it actually impacting that particular money that he is saving, invest in this particular product? Okay, so there are two things according to me. One is, yes, digital is the method of doing it. But I think more along with that, I think it should be the education, the awareness of insurance, and at the same time, people should feel. For example, I was told, I had just entered general insurance field, and I was told that in 21-22, during the COVID time, the entire general insurance company paid claims of almost 25,000 crores for. And when I looked at it, it came to almost 2 years net profit of the entire industry which was paid.
Yeah.
Then we came to know that first time in 35 years that health insurance has overtaken motor insurance, which is mandatory. So you buy a car, you have to bring it on the road, but after 2 years, after 3 years, the things are not insured. Yeah. Even today when we are talking, I think almost 52% of the vehicles on the road do not have a third-party insurance, including passenger-carrying vehicles. So tomorrow something happens to that particular vehicle and some of the passengers get impacted, there is no. So yes, physical is the method because we can't reach the place where we should reach, number one, and the time taken to reach there is very, very high.
Yeah.
So I think this, according to me, I think this is the best way of reaching.
Yeah. So Anand, I hear you, and you've covered a lot of reasons why physical and digital, both you've covered the aspects. But I think one thing you avoided mentioning was risk and the pricing of insurance products, maybe because Hitesh is sitting here and you were being nice to him. So Hitesh, let me confront you and ask you, are you the reason why insurance penetration in India is low? And because you don't allow the pricing, or you're not allowing ticket sizes to reach the last mile, or you are very, very conservative in your approach? Because finally you are the MyBap on which the non-life insurance industry runs.
Thank you, Parvez. I wish all what you said was true, but unfortunately it isn't. And first of all, let me also, thank the Zopper team, so Jendu Mayank, for hosting such a great event and already setting the context. Parvez, I wish, like I said, all of this was true. But I think rather than going on the rearview mirror, let's see what we need to do now, because I think the current dynamics of our country are very differently stacked than what they were before. I mean, we've all seen the way UPI has leapfrogged us into the next level of technology stack, the way mobile connectivity has leapfrogged us. So I think we should not rather look at the past, let's look at the future. And in that context, I would say that one important data point that we witnessed was that 36% of the 10 billion transactions that we are speaking on UPI came from rural areas. So which is, I think, a great data point for all of us to reflect upon and see how we can use that to really reach the last mile, which has been one of our biggest challenge. If you come back to the causes a little bit, I would say our discussions in the industry, and I think Sony Saab mentioned it very briefly, our discussions in the industry are still commission-centric and not customer-centric. And I think we need to change, and we need to really change that mindset. Most of our discussions, are still hovering around what will be the highest acquisition cost that I can pay, what will, and the intermediaries also ask for such, kind of, have that kind of an expectation. Yes, we understand insurance is a conversation-driven product. Insurance is not a product which people will just wake up in the morning and say, I want to buy today, and move on with life. It needs that nudging, cajoling, sometimes even shoving into the customer's mindset. And for that, yes, intermediation is required. But I think somewhere our equation is still not well balanced for the end consumer. And for the end consumer, we also have to see that she's also paying 18% GST on that. So, when what we start as a denominator of 100, for the consumer, it's 118. And then you add up the huge intermediation cost, that we add to it, the value driver is not there. So I think first and foremost, we need to arrive at the right value for the end customer. And for that, we all have to play a role. I mean, we really have to play a role. Intermediaries have to play a role in terms of ensuring that there is the right value provided. And for that, there's an fair cost. Insurance companies will also have to focus on efficiency, and then comes reinsurers, of course. We also have to play a role. And I think there, to answer your question now specifically, Parvez, I do see a lot of approach where digital can enable us to identify and personalize the risk, as much as we can. And I think that, I believe, will help us in improving the value to the consumer and improving the value towards penetration. I'll give you an example. We partner with, one of the, very, huge digital ecosystem player. And that digital ecosystem player is providing access to such amount of data that really allows us to differentiate a customer. Now today, the same product, the same risk that we are covering, there are 97 different variants. And we are able to do that because that data insight is available. And that data insight could be very, very different. It could be right from what browser the customer is using, to what rating the customer is giving on different portals, to what the credit rating the customer has, on the financial side. I think if we combine all these data, we are able to then provide the most refined pricing. And I think that really helps in differentiating the good risk from the bad risk. That allows us to price the right product, and that allows also for us to provide the full value chain to the customer. So I think in the future, a lot of data, digital touchpoint data will be used, but the conversation, the last mile will, I would still feel it will be, physical for some time to come, because ours is a conversation product. Ours is a product which needs that last nudge, to buy it. And all the embedded efforts that we do, I believe those are very contextual. Those are one time. They do not solve the problem, because the renewal is still then leaked out. So we are always, chasing a leaky bucket. So I think overall, we have to focus on ensuring that we use and harness both the resources that we have, information about the customer, which I think the digital platforms can play a big role, and then pricing the right risk, which is where the insurance ecosystem players can play a big role.
No, good. You give me a lot of hope with that. I mean, that the reinsurer is moving away from one size fits all to more personalized, and that's a good future to look at. Ram, let me come to you and ask you. You've You advise a lot of companies, and you've looked at non-life as well as life companies strategically as well as a consultant. And profitability for insurance companies is very, very important, especially non-life, and combined ratio being one of the most important metric. And the industry has seen a combined ratio hovering around 110, 120. And now, about 2-3 years ago, during COVID, we were talking about digital, and there was some hope that the combined ratio will come down because of digital. But then we talk of Phygitally, again, it moves up. And if we talk of going to the last mile, again, it moves up. If we talk about smaller ticket size and reducing the price, it moves up. So do you really think heart to heart, insurance companies, when they're looking at their combined ratio and looking at last mile, where will they trade it off?
Yeah. So, first of all, good morning. Good morning to all, and thanks to Zopper for conducting such a great session. Parvez, interesting switch into the combined ratio scheme of things. And when we have looked at this for different players, the three big components of combined ratio, one is the claims experience, the other being CAC, and the third being the OPEX. I think what we have seen is in each of them there are levers that you can pull to make this work. So to give you one example, I think a lot of innovation is happening, especially in the motor insurance side, both globally and in India, to make a good chunk of the claims processing automated, to reduce the number of the litigation that happens and the back and forth that happens, the surveyor cost, cut down the surveyor cost that happens. So on that, through that, hoping to improve both the claims ratio as well as the OPEX. So I think that is one. The second is also on the CAC, and you mentioned that Phygital leads to higher CAC, especially in remote areas, rural areas. So there again, the experience that we have seen is that, in fact, the more OEM dependent your distribution is, actually your CAC is a lot higher. And the more distributed your distribution is, though it's counterintuitive, because the insurers are actually dealing with widespread set of agents or POSPs and so on, the CAC actually looks much better even after adjusting for a slightly higher claims. So I think 2 points I wanted to make, both involving technology and Phygital. One being that we are seeing a lot of digital interventions across the life cycle and especially in claims to reduce the OPEX and to improve the claims ratio. And the second on the CAC, using Phygital and doing a wider distribution and using scale to bring down CAC as against just dealing with 3-4 OEMs, which keeps your CAC high. And on that note, the thing that I wanted to point out is that while it has been assumed that in general scale drives lower combined ratio, that's not always been the case, and we have seen plenty of examples where people have managed to break out of that loop, and it's not as if you need the enormous scale to really drive a lower combined ratio. And I think a lot of innovation is happening, lot in motor, little less in health, and a little less in life at this stage. But that's the trend globally as well. So I'm not surprised that we see the same thing in India play out as well.
Okay, interesting. Neelesh, let me come back to you and again ask you on technology. And what we've seen on the banking side is the fintechs have taken over most of the lending. 40% of the lending is happening through fintechs today. And we've seen the insurance industry pick up trends from the banking industry. And you've worked in a large enterprise, which is the Tata AIG company, and there are challenges of tech within a 20-year-old company. I mean, you have legacy systems to take care of, and then you also have a digital service. When you look at data also, there are challenges of data. Even when you want to give one view to the customer, because of the multiple systems over the years which has been built, those challenges remain in a large enterprise company. And you have the insurtechs which are coming in and only solving some part of the distribution problem, but not addressing all the other challenges which are required to reach the last mile. So do you really think that insurtech and the tech in enterprises, both these combinations, are actually going to solve the challenges, or it is just going to be an enabler? And when I mean challenges, this includes the last mile challenges as well as UI UX challenges, or it's just going to be an enabler there?
No, great question, Parvez. I think, first of all, let's understand, the tech required in insurance is not, we are not launching a rocket. So these are all, very tried and tested tech, whether it is, whether it's a platform or using simple AI or using the digital public infrastructure of the government of India or OCR technology. These are all very, very simple. I think the challenge, which probably InsurTech or legacy companies, the entire industry needs to solve is more powerful use cases. And the company, to answer your question, the company which really cracks that is going to win. And I do agree with your inference that no single company will be able to do it on its own. I think which is where entities like Zopper or other InsurTech ecosystems will need to come together. The reality is today, for example, if Tata AIG, you can go to our website and just enter your registration number of your vehicle. It'll give you a quote. That's it. But basically, the tech sitting behind it, and Mr. Sani said earlier, today we are in a very unique moment, because the availability of a Vahan database, the availability of the DPI, the availability of UPI, IIB, all of these are very, very powerful ecosystems, wherein automatically I can figure out what is your vehicle, how old is your vehicle, what is the variant, what is the make, what is your NCB history, and I can make you the first quote. So I think the used case is something, where the magic lies and, do it. The only other point I just wanted to spend, 1 minute comment on the last point. You were talking about transactions and Phygital. So, our chairman, had, Tata Group chairman, had, Mr. Chandrasekhar had written this book about Digital India, which was basically about this concept and how we address and solve this problem of India in 600, because India's problem is, the fragmentation of the customer. Unlike any other country where, there is, the urbanization levels are much higher and it's a very concentrated population, the problem statements, become different. So if you really look at a single sale, broadly speaking, there are two concepts of the sale. One is, where in a country like India, the financial literacy levels continue to be low. So where, you're creating that awareness in the customer, building that trust and, giving that comfort. The second part of that is basically wherein, there is something called a proposal form, where there are iterations, where, you have data entry multiple times. Somebody says, okay, I'm not looking at now 5 lakhs I'm insured, I need 10 lakhs, so then you go back. The endorsement, if there's change in address. So this is, and if I really look at it, 75% today of the friction cost goes into the second part. And this second part component is 100% can be solved by digital solutions. Today, I don't need to do data entry. If anybody is doing data entry in this country, it's like there are digital ecosystems, which are available. If a customer says, I need to understand how a claim needs to settle, the agent, village level, does not need to call, go anywhere. He or she should be having a technology solution, which is giving a customer testimonial and explaining the claim process right then and there. Iterations in terms of quotations, iterations in terms of coverage. So I think that's where the magic lies. Basically, how do we find these solutions? The tech is available and we can collaborate in the entire ecosystem and do it. And frankly, Parvez, I think the winners of the future are going to be determined by this.
Thank you so much, Neelesh. Thank you for that perspective. Ram, let me come to you and ask you, with this last mile challenge and the penetration challenge and the Phygital piece, you think collaboration is the way forward? Because India being a diverse country, the rural challenge has been there for a long time. And there are companies which have solved that rural challenge. Hindustan Levers or even the pharma companies, distribution has been solved. So you think insurance manufacturers should be tying up and collaborating with people who have solved the rural challenge, tier 2 challenge, or should they be tying up with insurtechs to solve the rural challenge, Or should they be tying up with digital e-commerce companies to solve the rural challenge? Not only to make money, but to solve the mile challenge. And do you think there is economics in that? And is collaboration the way forward?
I think great question, Parvez. Thank you. And I think I just want to build on what Neelesh ji just said, which is that I think the tech tools are now available to enable this. And it's not tech versus people or tech versus agents, it's tech plus agents. And we, in fact, as we speak, we are actually seeing POCs being developed on how generative AI can be used to enable agents in the remote parts of the country to serve the customer. Because it's hard to train the agent on every single question that a customer can ask. You know, how will the claims work? What happens if I change the nominee? What happens if I change the amount? But generative AI can now enable the agent to offer this to the customer right then and there with a simple, even a phone in hand. That's all is needed. The AI can actually make it conversational. It can understand what the customer is saying, even in Indian languages, and actually be able to play back what the preferred responses should be. So I think, and as we speak, we are seeing POCs being launched and POCs being tested out in the market. And very soon, probably by the end of this calendar year, we should see 1 or 2, pilot things rolled out in the market on this. Which brings me to the second point, answering your question, Parvez, which is, should they go direct? Should they go with the existing guys who have distribution? To my mind, the answer is all of the above. I think different players will find different ways to reach in a cost-effective way. And the technology can be used both in a do-it-yourself fashion with the customer, but also in an agent-enabled kind of a fashion. And we'll see both these operating in parallel for a long time to come.
Yeah, good. Thank you so much, because that again gives an option to the insurance companies to play with distribution. Anand, let me again check with you. What's your view on the list of initiatives which the government is doing? Especially the National Health Mission, Ayushman Bharat, and the Agri Stack, which is getting created. And what I've seen of the Agri Stack, the insurance companies or the lending companies just need to be one of the players, and everything is available. The government is creating the entire railroad. I mean, you're getting the soil, you're getting the farmer's detail, you're getting the land detail, you're getting the climate. Everything is available. No private company would have been able to do that. So you think the government is creating that public railroad for private innovation to happen, and it is in the right direction? You have any contra view, or it's just happening for the sake of happening, or it's actually going to benefit?
We have been involved in a lot of these government schemes right from 2015, when it actually started, when the PMJJBY, PMSBY, and all that started. My own personal experience is that the government and the regulator is creating enough or more enablers for the industry to take advantage of it. Now, that's what the government government can actually do. How does the companies or the manufacturers or the distributors take advantage of these various initiatives which either the regulator or the government does is totally left to us. For example, in 2015, when the CSC first came up, Common Service Center, which came up, and then regulator said that, can you make use of this and create some sort of, one is the reach in the villages, absolute villages. Secondly is if you can help the VREs, who are the new ones, to have sustainable income models. Many companies did. We also started doing work in that when at that time I was in the live side. And we were the first company to use the Aadhaar-based thing to start giving policies in the CFC centers, and just 2 minutes. So that that became a revolution. Paperless, nothing, no details required. Just give a biometric, and through that biometric, the entire details used to come. You make a payment through the electronic thing, and then the COI is actually issued there itself. So COI was the only physical thing that was given, because the villagers wanted to know that I'm actually made payment, but I don't have anything on hand. Okay, so that was the first part, going back to 2017. Look at 2015, 2017, 18, when I was in the operation side, we looked at it that why is LIC and the other companies having so much issues for people not coming and buying policies. 1% of the people are buying policies online. Why? Why is it so problem? The biggest research told us that the buying cycle itself is so long and so tedious that becomes huge problem. So we said, okay, let's try and look at it. So we came out with something called paperless, penless issuance of policy. Life insurance policy, which is paperless, penless. So we had the entire ecosystem which was available. How did we do a API tie-up with, say, NSDL, with credit rating bureaus, with IIBI and all of them, and got it done. 83% of our policies were issued without pen paper. Absolutely. So one was the pen paper was got completed, it's completely digitized. Secondly, we also ensured that the use of paper itself went down in the company. So it was more of a clean thing that we looked at it. Look at it now, when the current chairman of IRDAI is looking at it, the Bima Vahak and the Bima Vistar. Again, going to the absolute remote locations of the country. It's a physical distribution model through the Vahaks, but done on a digital platform. And here, all the three units of life, non-life, health, come together and offer one particular product, which has got all the things required for that particular thing. So, government is definitely giving a lot of these things which are available, and I think I feel that it's left to us to take maximum advantage of that. And how do you build on it and then create the distribution network?
No, I agree with you. I mean, the kind of initiatives that have happened and the speed of those initiatives, which one has seen, especially on the financial services side as well as the insurance side, has been unprecedented, and from the government. And extending that point that you were talking about, the regulator, and I want to come to you, Hitesh, and ask you about the regulator. But before I do that, that will be my last question to him, and I'll after that open it for the audience to ask questions. So if somebody can just make adjustments of the mic to the audience, and if you can prepare one or two questions which you can name the panelist and ask, this will be my last question to Hitesh. Hitesh, what the regulator has been talking about and doing, the regulator has for the first time challenged the insurance industry, saying that insurance for all by 2047. And not only has the regulator given a challenge, but the regulator has had a spate of initiatives coming. I mean, whether you talk about solvency, whether you talk about FDI, whether you talk about regulation being principle-based rather than rule-based, the circulars being done away with, file and use, and the initiatives about the 3 Bs, which is Bima Vahak and Vistar and Bima Sugam. So what's your take on these initiatives and what the industry is doing and what the fintechs are doing and what the government is doing? All these combinations with the regulator leading the whole thing. Is this the greatest time to solve the awareness, accessibility and affordability problem because everything is becoming symbiotic, or are they competing with each other?
I mean, that's again a great question, Parvez. I think, like you already mentioned in your question, I think from a timing perspective, this could not have come at a better time because we had 2 once-in-a-generation events that preceded. We had COVID, we had digitization, demonetization. So I think what demonetization did is that brought the whole concept of digitization to the entire country, and what COVID did is also, in a way, created that kind of fear or sense of awareness, and we've seen the impact of that on the way health insurance is now getting distributed, the health insurance is getting purchased. So I think from a timing perspective, this has come at the right moment for us. We have the infrastructure ready, we have the necessary macroeconomic environment that we have in our country ready, and then we have the right catalyst in terms of easing out of the ways of doing business, easing out regulations, bringing in reforms on the risk-based capital, which will come soon, new accounting system that will come soon. So there's a lot happening. And I don't think from that context, any input resource further, is required. I think now the entire onus is on us, the ecosystem players, insurers, reinsurers, distributors, fintech, insurtech players to really grab these opportunities, with both hands, and then figure out what is the right, way and method to kind of reach out to our customers. And two ways to do that. One is, of course, we will have to now think, as I mentioned earlier, to think of contextual products that make relevance to the customer. If we see by and large, we still go back to the same personal accident and traditional motor and health products that we offer. I think we will have to, start becoming more innovative and more creative. I feel parametric products, considering the whole, I would not say fear, but the whole threat of climate change looming on us now. If you see most of the countries which have really leapfrogged in terms of their penetration, in terms of their per capita insurance spend, has largely been triggered by the situation that the country is, whether it's Australia or Japan or US. I think now with the climate change and the frequency of events, probably most of the economies are now in the same situation. We've never seen a cyclone in the West Zone. Now we see every year, right? So I think to that extent, that awareness is coming. It's coming. I think the consumers are feeling the need to protect themselves, and COVID really kind of, speeded up, accelerated that. And the event of the climate change, the digitization will also create that cyber need. So I think we will have to also start focusing on these new segments parallelly, and not just be stuck on the traditional products that we've been, focusing on for so many years. You take banking, you take AMC industry, they have really innovated quickly and they've made their products very contextual to the current generation. Same thing we need to do. That's one. Secondly, I think we all covered that topic in some way or the other. We will have to, really make the distribution process more seamless, more convenient for the customer, reduce the friction cost, as Neelesh mentioned. There are only two industries where the friction cost is higher than us. And I will not name those industries because both are injurious to health. And we have to really, really cut that, friction cost for our industry to make it really relevant for the customer and affordable for the customer. Today, we can't manage with such high friction cost if we have to really go on the high penetration treadmill. I feel very optimistic about all the input resources and input catalysts that we have. I think now the ball is completely in our court.
Thank you, Hitesh. Questions? Anyone? I can go on, but yes, there is a hand raised there. Can you reach the mic? Sir, can you please stand up and then name the panelist whom you want to ask the question to?
Hi, good morning, everyone. This is Indrajit here from Niva Bupa Health Insurance. See, I've been a banker for most of my career. And if I go, a decade back, when we were talking of financial inclusion on the banking side, fortunately, I got the opportunity to work, on the financial inclusion side. So what we realized that in order to get financial inclusion, and when we studied a lot of, experiments happening around the world. So in Brazil, which was among the pioneers in financial inclusion a decade ago, so just by providing a lock box, they saw that the savings rate improved substantially. Right now, so what was, the insight there was that if, that time I was a banker. So if as bankers, we were able to provide a simple product to the customers, the penetration increased substantially. Now that was 10, 12 years back. Right now we are talking of UPI moment and we are looking for, we are saying the DPI is coming even in insurance side, whatever, the IRDAI is doing. So now coming back to present and coming back to insurance. So I've been leading a few of the PSU banks, leading PSU banks on the bank insurance side. And just to give you figures that the business which comes from a rural, a semi-urban or an urban or a rural branch, to my surprise, they were near about 25%, 2-3 percentage points here and there. So the thought that, in urban areas or semi-urban, the awareness is not there or people don't want to buy. If we provide a Phygital model, things are happening that way. Now my question to the manufacturers, either Anand or Hitesh or Neelesh, is that, is there a consciousness among the manufacturers that, while, we heard Mr. Panda, I think a couple of months back, he said, there is a missing middle class, right? There's a lot of scheme for the bottom of the pyramid, which the government is providing. And, the elite customers, of course, they do buy their own. But there's a huge missing middle class. So as manufacturers, are we working specifically on creating products which are relevant to this middle class? Yeah, thank you.
So who wants to take it?
Thanks for asking this question. as you are a banker, I was also a banker earlier, and from 2004 I was handling SBI Life. So we had the biggest banker as our thing, and now also with General, we have that as the bigger. See, every insurer is looking at how to market that particular middle missing gap which is there. After all of us want to get into that particular thing and penetrate into it. There is an effort at all levels to try and get into these particular things which are there. I personally feel it's basically the lack of awareness of what the guy needs to buy for himself as far as the health product is concerned. How many of us have actually gone and bought up a super top-up on the mediclaim which the companies have given us? Is the company's mediclaim enough in case if there is a bigger risk of some ailment which is going to hit you or your family? The other problem here is, and I'll be very open, some of the guys probably, the press guys will probably put it in a different way. Today in India, we need something like a health regulator. And this is what we have been asking for a long, long time. When you go to a hospital for treatment, the doctor doesn't ask you what are you suffering from. He asks you whether you are covered under mediclaim or not. And if yes, the costs are completely different. So middle is the one who's actually bearing that brunt. And we have actually seen through research that those guys who are just above the, the mass affluent, as we call it in that, if they are not covered under the right medical cover, due to some illnesses which take a larger part of that treatment, they actually move below to the next class. I personally feel it's basically the awareness, understanding what they want to buy, what is available in the market, and what they need to. And that's exactly all insurance are trying to do to the best way. Only thing, again, it's my personal thing, and I think the industry is also responsible for it. The way mutual funds have ran a campaign, mutual funds sahi hai, that kind of campaign has never happened in life and non-life for a sustainable period. That's the reason you say now, look at the SIPs that are happening by the people, and look at the kind of insurance products that people are on their own trying to buy. So I think this is the main thing which is, according to me, this is something which is important.
Thank you, Anand. I think considering the time, we have time for one more question.
Hello, yeah. Thanks, Parvez. Very interesting conversation and very insightful. I'm from HDFC Life, Monesh Parekh from HDFC Life. My question is to Mr. Hitesh, as a reinsurer, when do you see the maturity of the tech when the reinsurance starts accepting something like an AI, machine learning? What's the maturity which you see?
Thanks for that question. I think we're already there, I would say. There's a lot of underwriting. I think you also mentioned that the generative AI is already started getting utilized at the intermediary stage, and the same generative AI has already been started to use at an even underwriting stage by the insurance companies, and then that seamlessly connects to the reinsurance mode. So to answer your question, I would say it's already begun. It's already commenced. There are many use cases across the globe where a lot of this generative AI technology that is being used. Facial, recognition, facial, features are also used to do the underwriting. A lot of BMI is getting, collected from various data sources, and that is utilized for underwriting. So I think it's already started. It's just a matter of, I would say, the number of cases that can go up. And as and when the number of cases go up, the technology will become more and more smarter and much more efficient.
Thank you, Hitesh. I think I'm just conscious of the time, and the other questions we can take during the tea break. Thank you so much, gentlemen. It was great and insightful learning experience for me, hearing you. And over to the host. Thank you so much for the interesting panel discussion.